Hey, welcome everyone. It's Rob. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you please type the number one in the chat box, let me know that you can. Morning, Helen, Brenda. Hey, Stephanie, thank you for that. All right, Andrew, Alex, good afternoon. Excellent, everybody. I appreciate it. Thank you so very much. As we do get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance before you ever take on a trade, a setup, or add an indicator. All right, let me go ahead and see if we can't get that puppy working there. Bueno, there I am. All right, everybody. Well, again, welcome. I hope you're all having a great day. It's been a wonderful trading day today. We look at our agenda today, although I think we'll talk a little bit extra about the S&P today. We're going to go through our follow us page. We'll talk about today's trade. So make sure you get those trades ready today, over the last couple of days, whatever it is. Economic reports will be next. Then a review of the market, our upcoming trainings, weekly training topic, and your stocks review. That's where you give me symbols to look at, and I tell you what I think of the pattern, the chart, the setup, whatever it is you're asking about it, outside of should I buy or sell it. So here is our follow us page. Make sure you follow along, guys. And we got a ton of stuff that goes out there every single week. Don't miss it. And you don't need to follow all of them, right? But I'd love if you did, but you don't need to. But pick your favorite platforms and go there. All right, today's trades. What trades did y'all do today? Go ahead and drop those in, folks. And again, it doesn't have to be today. It could be within the last couple of days. Good, Alex. I started reading it and I love what I'm seeing there. Let me read the whole thing out loud, though. Far more important than any single trade, last month I finally wrote down a detailed trading plan like you recommended in Trading You. Exactly what I'm looking for in candidates and trade setups for specific times. I will proactively look for specific trades, how much I will risk in each, target for each setup, etc. This made a huge difference with my trading, and I've been crushing it in the past 3 weeks. There you go. You know, I get it. And I would get this question constantly, or some form of it, at when I would teach live events. Someone would come up on day 2 and say, I get that the basics are important, but give me the sexy stuff, man. What makes lots of money? And when I tell you, it's things like mindset, you're like, boring. You know, it is the basics that make you money. When I was in manufacturing, we did not make money when we sold a product. We made money when we bought our raw materials. We had to do really good at buying the raw materials. We did really well on the profit there at the end. If you do really good at buying the stock at the right price, you have a much better chance of doing really well buying when the stock is at the right price. When you go and sell it, than if you buy at a junky price and you're just hoping and praying that it all worked out. So Patty said, no trades today. Everything gapped. I know I was reluctant there, Patty. I'll show you the one I did. Stephanie said, didn't trade, but noticed that the SPX had $10 spreads in the first hour. I haven't traded in it in a few weeks, but this is the first time I've seen this. There you go. Mark said, just started writing down the beginnings of a trading plan, reviewing manuals, videos. It's a lot to absorb. You know, and Mark, and for everybody else, I give you a lot of credit to do it. I get it, man. It is not a simple task. Mine is here. Right? I have nothing on the outside. No one knows what it is. It's just a blank black binder. And you open up to my top secret playbook. All right? I don't know if you can read all this. So day trading playbook, top secret. This confidential document is not for distribution. Right? And the football field was a suggestion from my mentor many, many, many moons ago. And I've stuck with it ever since. It's strategy. Everything we do in the market is strategy. Football is all about strategy, right? I used to play football, organized football. It wasn't, we had a team, but we weren't in a league. We built our own league. Basically, where I grew up in Queens, there were, a lot of people lived in that area. So you could easily have, 10, 15 people playing ball for you. We had 25 or 28 people on our team at any given time. And I played defense. I was on the line. And my job was to knock someone's head off. That was plain and simple. Knock them down, make the ball get free. That was my job. And I had a really good playbook for doing it, right? Hit them hard, hit them when they didn't see me, and just, hands at theirs and knock that ball away. it's a play, right? It's a trade setup. It's all about that. Everything when you're writing your trading plan, it's work. It's work. And especially when you try to, like someone of my personality, oh God, I am trying to incorporate every single possibility of every single thing that could ever in my history of my life and my great, great, great grandchildren's lives go wrong. And you can't, right? All you can do is plan in there that 80 to 90% of what you know tends to happen over and over again. And there's always going to be a plane got blown up in midair, or oops, there's a war just broke out, or oops, something else just happened. Oops, the CEO of XYZ stock just stole all the money, and moved to Mars, right? No extradition plan there. Whatever it is, there's always something that might happen, that one off that you just can't plan for. So you get everything you possibly can in there. Alex said, that said, I caught the pop on UNH this morning, even though the SPX has been stuck at 100 level and an old fib line. I usually only trade in the direction of the S&P, but this time it worked out great. Excellent. Good for you. I was pretty good at football, Mark. Yeah, when it came to sports, I was very good at all sports. That didn't require me to be on skates, which is why I was a goalie in hockey and not on a line shooting somewhere, because I could not skate, and still cannot. For my life, I couldn't skate if I tried. Can't get on a skateboard, can't skate. Skis, horrible. Bicycle, I'm okay, but when it came to hitting people and hurting them, I figured that one out pretty good. Right, so I had two massive guys that were on the line with me, so that definitely helped. Amelia said 32% ROR and IBM both put credit spread as a day trade today. Great job, Amelia. Let's see. Okay, so let me share this with you. So I have said it even last week that for most people, you should never, ever, ever, ever trade the opposite direction of the S&P 500. It got brought up in here. Who said it? Was it? Who said about opposite direction in here? Was that Alex? Yes, Alex had said it. Thank you for that, Patty. Alex had said that, right? Where if you trade in the direction of the S&P 500, 70 to 80% of all stocks tend to move in that direction, right? And I traded in the direction of the S&P 500, but I did it a little bit differently, all right? What does that mean? Well, the S&P gapped up, well, it's still up about 145 points right now, okay, a little bit more. So we blew right through that line I drew there last week, which is a recent swing high that was run on Friday's pop-up date, or Thursday's pop-up date, sorry, for Friday. And what I'd look for is a bullish move up, right? Find a support, pull back, bounce, and give me a bullish entry, right? Well, Lily, we got a bullish entry, but not the way I wanted. What happened? We gapped down in an already bearish market, and I took a bullish trade. But Rob, you're not trading in the direction of the S&P 500. Actually, I am. Today's move in the S&P was massive. So what happened? We got this gap down right out of the box, right at 9:30 a.m. We gapped down below our support level. And I'm sitting there looking at this in pre-market, and I was kind of position number one, position number two, position number one, position number two, and it was okay, and maybe, and I don't know. And then we got this gap down, right? And if we look at this on a 5-minute chart first, all right, vertical line right here, about mid-screen or so, just west of the 5/12/25 date, right? We gapped down right there, 5-minute candle. We stretched down and ran up, massive candle. And we had a movement in there of, let's call it 722 to 742. We had almost 23 points of movement in that candle, right? Freaking huge. And then we gave every bit of it back, little by little by little by little, right? And we started to pull back. Not all the way down, right? But we came back down through that same level to where we got down to, right? Hence, I've got a 1-minute chart open, and I'm looking at the exact same pattern on a 1-minute chart. And what's going on as I'm seeing this? I'm watching the 5 off on one side. I'm watching the 1 off on the other side, right? Let's get rid of that crosshair. Okay, there we go. So here's the gap down. Second candle, we push further. Third candle, big move up. Fourth candle, nice move up. fifth candle in a 5-minute candle, really nice, right? And as I'm watching this, we get this gap down, and I see this candle here. And of course, the 5-minute is building the same way because it's incorporating all three of those candles. And I'm watching it build on that candle, and I'm in position number 1 in the chair. And at that point, I'm very much in position number 2. Why? Because although we've got a bearish bias on this stock, right, on Lilly, we've got a bearish bias. We're at a rank of 2. We got near that key level. 0.764. Can someone tell me in the text chat, what does 0.764 mean? One word. It is a one-word definition I'm looking for. What is it? Right, Alex. There you go, Patty. Excellent. Good. All of you. Excellent. It is a hesitation level. So when we gap down to that 764, just below it, keep in mind, no support or resistance, whether they're my fib lines, your fib lines, your horizontal support or resistance, your trend line, I don't care what it is. No support and resistance is a line in the sand that says cannot, will not, shall not ever be crossed. It's a starting point. And we're looking for a general area. We get a little bit below, a little bit above, we're good. Ideally, we want to get as close as possible, take the bounce in there if we can see that, right? So I'm looking at it, and then I notice on Lilly that the distance between here and here, between the two fib lines, there are no obstacles in the obstacle course. I have got a full run all the way up. Will I get all of it? No, not at all. Will I try? Yeah, sure, I'll try to get all of it if we can. But I am not worried about taking this trade. If I am wrong, my stop is down here. I'm out of my trade regardless of what it was. The key was if I get in off the key level, my stop is going to be minimal down below there, right? So we go back to the 1-minute chart. And now let's analyze it. All right. Let's use red for this one. Gap down, run, pull back, right? And on this candle, that large black candle, bearish candle, where we pierced through with the wick, right? Very scary position of, are we going down? Are we looking to break to the downside there? And, you know, it's a consideration. So we closed here. Now I'm going to get rid of our lines. The fib line is 730.29. We closed at 730.88. So call it 30 and 90, 60 cents away we closed, right? We're pretty close. I am definitely in position number 2 at this point, starting to lean into position number 3, okay? And as we gap down and open and we bounce, I'm waiting for the bounce off of there. I'm waiting for the potential entry and taking it right there, right? So I'm looking for about $1 above this level. I think I want $1.25. So it's like 731.5. What was my high on this candle? 732.65. So I am in on that same 1-minute candle right there, right? So the entry, let me draw it. Oh, we'll keep this in here. Yeah, I'll do it this way. That's my entry candle, right? ENT entry. I know it looks like a bunch of messed up lines in there, but that's the entry candle. Did we take some heat? Yes. We came back up, did not quite make it as high as we'd gotten there. A little bit of fear on that. We put a lower low in there, right? We came back up, we pulled back, and the fear was the breakdown at that point. And then we finally got the run, and we finally got the continuation. You can see where we actually ran out of steam up in here. You know, so you're talking about going from 730-ish support up to 760.58, and you're out of this trade right about 752. Right? So tremendous opportunity there. But why did I take it? And that's more important than anything else. It's not, I saw it, you didn't. It has nothing to do with that. It has to do with, I didn't like anything else. If we look, Adobe, right? Gapped up. I didn't want it. We gapped up on AMD. We gapped up on Amazon. Everything was a gap and go. It just gapped up. Wasn't interested. I did not catch the booking when it pulled back. This I didn't want to take anything on, right? Costco. So it really, this is in the middle of nowhere, right? But you go to Lilly, and we had a good shot of Lilly. Now, I did not take full contracts. I only did one contract on this. That's all it was one contract on it, right? And we got the bounce and the run up. And when we get into, which is coming up soon, actually, June 4th. June 4th. I don't know if we have that on our list yet. I got to make sure we get a link on there for that. So on June 4th, I'm teaching an online class called Micro Day Trading. I'm calling it a 1 hour class. I cannot tell you if it's going to actually be done in an hour or it's going to take us longer than that. Never taught it before. I have no idea what it's going to entail. But basically, it takes us back to the patterns like today and what caused me to get out of that trade. Why did I not hold it till the end of the day? It is a very, very, very inexpensive class. It's a $29 class. But it's everything that's happening, has been happening for the last 3.5 years, for almost 4 years, of exactly what the way I look to trade it. And I found this all by mistake. I was doing it, didn't know I was doing it because it was more of a gut feel until I developed a system around it. And we're going to release that on that date. The setup from Friday on Lilly looked like a potential switchback. Someone else had said switchback in there. I didn't go back and see the comments yet, Patty. I don't know if it was you or someone else, but yeah. So on Friday it was a switchback. It absolutely was. The gap down with the S&P being up as much as it was, I was not interested to take this against the direction of the S&P. So what happens? I don't want to take it against the direction of the S&P, right? So I trade in the direction of the S&P. Now I'm trading a bearish candidate with a bullish setup. Has to be day trade, can't hold it overnight. You're setting yourself up for potential failure if you are holding positions like this overnight. In this kind of market condition here. So, with the trade from today. So I like what happened with Lilly. Is it going to collapse from here? I don't know. And I don't really care, meaning I'm out of the trade, who cares? Right? That's fine. I wasn't doing this for long term. I wasn't doing this because I want to buy the stock at some point. I did this because of the setup and the stars kind of aligned. Were they perfect? No, but they were pretty darn close. I don't know if you could see that or not, right? They were pretty darn close. Dennis said, do you feel like the markets will fill the gap? Well, it's news driven, right? So what's going to happen is there other news that's going to drive it. I think some of the stuff with China today, that Trump came out and announced, right? He got on himself, and then there was a couple of others that talked about China and the tariffs, and they think Europe is going to be good. And again, last week, India saying that they were going to drop everything from 13% down to 3%. But keep something in mind. The tariff, as it comes across, if you're buying a product and that product sells for $100 on Amazon, right? On Amazon, it's in somebody's store, right? I can promise you that the manufacturer was $4 or whatever the number is. I'm making it up, right? Was $4, $14. So it doesn't matter. That 100%, 250%, 400% is on this. Not on this. If all of the others decide to jack their prices up by 250%, that's a whole different story. And tell me, how is that even feasible when you have companies like Ford that have come out and said, we are lowering all of our prices on every vehicle to every customer to employee pricing, which I know how that works because that's how I bought my, I have a Ford, an Explorer, my truck. That's how I bought mine. I knew somebody that got me that friends and family discount. It's $100 over dealer cost. Don't worry about the dealer. They still make money other ways in bulk and how much they buy and warranty contracts and repairs. They're still making their money. So don't feel bad for the dealership. Okay. But how does the dealership, with all these increases in price, be able to drop their price and still stay in business? Right. So don't look at this big number and say that's what our 200% is going on. It's the small number that you don't even know what it is that's happening to. But I think a lot of the tariff stuff. So, in a roundabout answer, Dennis, to the S&P, I guess my best possible answer is I don't know. It is possible. I don't like gaps like that. Most gaps tend to fill. So I like if it does fill. We had this gap here. We had this gap here, right? We had this gap here. We filled that gap. We filled this gap right there. This one in here, we filled this right here, this gap to fill it up in here. So most gaps tend to fill. Will this be the one where we just take off and we never pull back from there? It's very possible. It may be a summertime fill, pull back. But I mean, we're in great shape right now, with the exception of our Fibonacci is no longer valid, right? Because we just blew through everything and we don't have a place to redraw yet. So we're going to be working off of previous fibs for a while, which makes it a little bit on the sticky side. Yeah, Alex had said, so you took advantage of the switchback setup. Okay, good. I knew I saw it somewhere in there. Hey, Les, how you doing? We factor in the coming dividend. Don't most stocks dip after the dividend? I'm not sure. You're talking about on Lilly, correct? I'm not sure. I didn't really look at their dividend. So, I mean, they dip after the dividend, Les, right? So if they're paying out on Omega charts, it tells us it's $1.50. So they're paying out $1.50. Once it becomes it's ex-dividend and you're past that date, basically, if they take $1.50 out of the stock and give it to each customer based on shares, they can't leave the stock valued at that same price because it's not. They gave money away. Company's worth less, so they take that $1.50 out. But in reality, that's a one-time since that happens right now. It could, if it was really good news, it's probably trading back up through that number again that same day. But I don't account for that, especially that I'm only day trading it. Stephanie, MSTR for a trade that you want, was that one for us to look at the end, or something, or a different reason to look at it now? How do you confirm your entry from the chart, the 5-minute? All right, so Mark, let's talk about that. So I don't have TradeStation open, but I just find that it's crushing my computer. TradeStation, Omega charts, Zoom, my drawing tools. It's too much, even though I've got like a quad 370 million processor, whatever the fastest thing was when I built this computer. Even with that, it doesn't matter. It's just it's brutal on the, if I'm running just Omega charts and TradeStation, no problem. As soon as I introduce Zoom, this ridiculous light, so I look somewhat pretty while I'm on here, it's just everything just draws away from the computer's power. So when I look at, so I can't show it to you on those charts, right? But let's do it this way. Not what I wanted. Okay, let me close that down. I was looking for Notepad, and for some reason I clicked on Word. All right, so when I'm looking at this, Mark, I would have my charts kind of look like this. Right, I've got my 1, my 5, which is my primary, my 30, and my daily. Right, so ideally, Mark, I want to see the overall pattern of the daily to be bullish, right? Great if it's pulled back a little bit and it starts to bounce. That's wonderful, right? Once I find that and I identify my potential trade setup for today off of a daily, I go over to my primary, which is the 5. And I look at the 5-minute candle and I'm looking for the right setup in there. I'm looking for that pullback to a support level. So we broke out above, pull back, close near it, pull back a little bit more if you can, great. If not, don't worry, and then bounce and take the trade off of the bounce, so my stop is down below. But there are times that, like today with Lilly, I didn't have a good, I closed here and then I gapped down. Then I wound up closing down here, opened here, and ran all the way up. Closed here, ran all the way down. Closed here, gap down, big run down before I moved up, and then this maybe, right? But if I take that mark and I break that out to a 1 minute, and I've got my charts side by side. So whatever's on the far right of my 5-minute candle, the far right of my 1 minute, which is just to the left of it, right? Because my 5 is here, my 1 is here on my chart. Just to the left of it, I'm watching both. And as the 5-minute is pulling back and getting near a key level, but I don't have a good setup on there, I look to the 1. and the 1 is what I call my tweak. That's kind of the finesse, right? And then I'll see on a 5-minute chart, let me get rid of this crosshair. Let's do it this way. Let's call this the 1. No, let's not do that. So let's call this the 1 and this the 5, right? That is a 5. Okay. So as my 5-minute is moving up, comes back and pulls back, my support level is here, right? I still have the same support level on the 1. It's the exact same place, okay? Same price point. We're pulling back and we kind of close too far away, or we gap too far down here. And I don't have what looks like a good place that we closed and bounced. I will then shift over to the 1 minute, which is already on the right still. And now as we're sitting, what was the representation of this pullback here? So this point right here, I'm going to switch colors now. That point right here, we may have our 1 minute looking like this. Okay, and my 1 minute has gotten in there where on this, we don't have a closing price. We just have a wick has moved through. On the 1 minute, I look for the finesse. And as we close close enough, usually within $1, ideally stretch down closer to it and bounce, get at least $1 up off of that. So if that's 120, I won't take the trade before 121. Mark, does that help? Does that make a little sense? Thanks for that. Where did you put the stop? 25% below the fib. Exactly, Mark. That's exactly where it goes. It would be 25% below that fib line. Yep. Yep. Or you're using a trailing stop at 110 to 150% of the ATR. Hey, Andres. Good to hear you there. Let's see. And the stop held. Yeah, we didn't get anywhere near the stop, Mark. We were fine. We got nowhere near it. All right, Stephanie, you were asking about MSTR. If you're okay, Stephanie, are you okay if we just hold that one until the end so I'm not kind of jumping in with candidates right now? Unless there was something about a trade setup from today or something that we wanted to go over now, I'd rather just hold that one to the very end if you're good with it. Okay, good. All right, so you wanted to trade, but it was going the opposite. Yeah, we'll take a look at it, and then you can type in what you saw there for me, Stephanie. So, okay, let me bring us back to here, economic reports. We haven't even gotten into the market yet. All right, so President Trump speaks 9:30. Guys, anytime the president speaks, it's right now it's orange. If there was more, if we were involved in war and things like that, they would become more red. So if there was a more serious scenario, I know some will say that, Rob, that's crazy. Tariffs are very serious. I'm not saying they're not, but serious harm, are we, right now we're hurting somebody financially, ourselves, other country, whatever it is. But you talk war, and now you're talking about people's lives, right? A little more serious. So today, not a whole lot to worry about. Tomorrow, it's all pre-market. 8:30, all big reports. It's all one report, really. CPI, Consumer Price Index, basically what you pay for a product, what you pay for things, okay? It's 8:30, so it's pre-market. Unless you're trading futures or you're holding overnight, not much to affect you there. Wednesday, there's nothing. Thursday, a lot of 8:30, and then 8:40, which is Fed Powell speaks, Fed Chair Powell speaks. There was significant talk of the potential first rate cut in July of the year, and now there's talk of maybe not until later than that. So, as a business owner, that's a problem to me. We've waited way too long. There's money that I want to borrow for things that I won't borrow because it's too expensive. Yeah, I mean, it's just there's capital improvements people want to make that they're just not going to do because it's too expensive. people looking to move out of their home and they can't because they've got a 3.5% interest rate, which they'll never get again. They got a 3.5% interest rate. Now they're paying 7%. It's double. Double. I mean, how do you justify that? You can't. Meaning you as the individual, how do I say I was paying 1,200 now pay 24? You can't, right? It's just not there. And it's not quite double, but the interest rate is double of where it was if you had 3.5. So I don't that in and of itself could have some major effect on us. If you look at our VIX, we're very low on the VIX right now, 19, 20, somewhere around there on VIX. So super low on the VIX. Very, very happy to see it back there. Right? And then Friday we've got 10 a.m. Those are important reports. Keep your eye open on this. The market is open. Right? Meaning if you get in a trade at 9:30, 9:40, 9:50, you could be affected by this announcement. Right, which is consumer sentiment. How do you, the consumer, feel about what's going on in the economy? That's what it is. How do you feel about it? And for many, it's not good. It is not a happy feeling. I know, we had Mother's Day. Happy Mother's Day for all of you. Hope you had a great day yesterday. We had Mother's Day dinner yesterday. My brother-in-law was there. And there was conversation around the table about the tariffs and how bad they are and how much it's affecting us and what's happening and the economy, the economics of it and so forth, right? Good, healthy discussion, without a doubt. But my wife and my mother-in-law both sat there going, they had no idea what we were talking about. My kids just ignored me. They didn't pay any attention at all. But can the interest rates and what's going on have a dramatic effect on us? They can, right? And we're lingering and dragging this out. And listen, is it costing us more money because of it right now? Yeah, but that's not my biggest fear. My biggest fear, we're going to go, oh my God, we need to drop rates now. And we're going to start dropping half points to play catch up, right? And send our economy into a tizzy at that point. So that's where some of my fear comes in with what's going on with interest rates. Flowers were expensive. Everything is expensive. Everything is expensive. We went to an Italian restaurant, of course, right? We go to an Italian restaurant, my wife, it's not our regular place. Our regular place is a hole in the wall that's it's a pizzeria with a restaurant in the back. The area looks okay. The food is absolutely outstanding. Ask anybody on my team if they've been to New York. I've taken them there. The food is absolutely amazing. We go back. We're regulars there. Every week we go for dinner at that restaurant. We went to another place. My wife said, "Oh, can I have a little side?" She can't have butter. Can I have a small side of sauce for my bread? Yeah, they charged her $2 for a cup. Not much bigger than this of tomato sauce, right? For everything we asked, it was extra, right? And I understand it costs more money. I'm not griping at it, okay? But everything has gotten expensive. It's not just flowers. Go to buy flour. I make sourdough bread. Go buy flour. Everything is crazy. Alex said, we sold our house last year and moved, great cash out, but holy moly, our living expenses have nearly doubled from 2010's mortgage to today. Oh yeah. I believe that, Alex. And again, we're in the midst of it right now. Let me see. Is Roman in here today? I haven't seen him chime in. That doesn't mean he's not here. It's just a long list. Give me a second there. No, he's not in here today. Okay. So Roman's a big real estate guy. For any of you that know him, have met him through Mastermind Inner Circle. He's a big real estate guy. We're getting ready to embark on a fairly large number of properties that we're going to purchase right now. Mortgage price be damned, it doesn't matter. I'm not buying with my own money. It's all going to be OPM. Every bit of it's going to be OPM. Some seller finance, some are not, some DSCR, some conventional. But we're not waiting anymore. We're not, right? There's the strategy we're going to employ. There's too much cash sitting on the table right now. I've got other properties that I need to roll those monies into something. So we're working on that. Those that are in a circle and mastermind, there are some things that you can do with taxes. I'm not legally, I can't legally tell you what to do because I'm not licensed in taxes or entity structuring. I can just tell you what I'm doing. So I'll be sharing some of that stuff with you guys. Actually, I have a meeting with my group today. My accountant and my attorney and the guy that does the structuring for me. I'm meeting with them today to go over how we, better better protection from lawsuit, of course. And then how do we minimize taxes? How do we stop this 1031 junk from happening on exchanges and all of that? So, oh, Alex said another note. I now live less than 5 minutes from AVGO, which is Broadcom. I literally drive by them on my way to the gym and silently thank them for all of the opportunities they present and money that I make off of them. I think that you should make money off of everybody that you work with. And I learned that when I was an Amway distributor. My barber didn't want to buy my Amway supplies from me to use in his barber shop. I went to another barber that would. Right? You're making money off me. I need to make money off you too. One hand washes the other. All right. So economic reports. Right. From there, let's go look at a market review. Now, we've talked briefly about what's going on, but now let's really dig in on the market itself. So let's go look at a standard time frame, which is daily. Okay. So guys, the gap up, and here's the magic to this. This fib line is 57.8695. Right here, 57.8695. Our low price today, 57.8608 versus 57.8695. So less than $1 away. We gapped up, we pulled back, and we bounced. If you have a $5,700, $5,800 level, and we get there in less than $1 when we bounce, as far as I'm concerned, we didn't get close to it. We crushed it. We crushed that level when we bounced off of it, right? So we gapped up, we pulled back, and we bounced. I would not expect large candle today. We're up 155 points right now. If we finish up, if we can finish up above the zero line, I mean the one line on the fib lines, I'll be tickled pink. Tickled pink if we stay above there. Retest and bounce would be wonderful, tomorrow. The 8 moving average has crossed up very nicely through the 55. The 21 is only a day or two away from crossing through, even if our stock went sideways here. Because of the momentum inside of here, this 21 is going up to the 55 shortly, barring a big drop to the downside. We got 21 days of calculations in that to make that up. We're going up. There's no question we feel that. We get our 21 above our 55. Our 8 will continue to climb higher, of course, as well. And then that puts us in a true bullish bias. And now, give me that pullback and that bounce. Focus on extending these fib lines out in the meantime, using the same fibs I am, which we've already violated the 882 in here, right? That's gone. We blew through that completely. If on no other day, we did it today. Close, well, we're not closed yet, but I don't think for a second we're not going to close up there. Okay. So when we look at the S&P 500, we're in a bullish bias rank of 2 right now. Love where it's at. And just for a quick correlation, go to the VIX. My God, we're at 1890. Guys, my bottom level is 18. So my bottom line is 18. We're right there. We are right there. So we've gone down into the very lowest levels of normal. The green is normal. We get down into yellow. Yellow, by the way, is phenomenal. Phenomenal if you're a buyer. It's not very good as a seller. It's okay. It can be okay. Red is bad for sellers and buyers. It's just too volatile. Larger bid-ask spreads and the likes, right? If we look back, though, if we look back at time, we look back at a larger time frame. Let's go look at the weekly now. This is an interesting chart now, right? On the weeklies, how weekly is it? Right? We had a massive downturn here. We had this one bullish weekend there, and then this big, gap down, retest and bounce. Okay. From there, we got a pullback, and we got that reversal back up. And then we had 2 weeks in a row, we closed right near the 882. We got above it 2 weeks ago on a close. Then we closed just below it on Friday. And then here we are, lo and behold, the next week, the next day, boom, chakalaka. We are right up at that 57.87 level, right? And we pull back. And as I said, we were within $1 of that level. So the weekly chart, 1, 2, 3, 4, 5, 6 weeks. The last 6 weeks, one of them was bearish. Everything else was great. Everything else was fantastic. So that's on a weekly. Let's go look at a monthly. The monthly, we've had 3 months of, well, not even 3 months. That's not a fair statement. So this candle right here, I can't say that that was havoc. How could I do that when you have this? We've done this for 4 months in a row. Sideways, 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 sideways. Listen, you're not making a lot of money on your stocks. You're crushing it on your covered calls. On your directional trades, you're still moving up and down. You just don't have the big swings, and I'm okay with that. I mean, this run right here, that was amazing. How many months was that? 20, 24? Amazing. And then we get this week down here was a big pullback, broke that rectangle. This one, I mean, this is not week, month. This month here, last month, so April, we were all over the place. We closed near the 54.73, this brown line, right? That dark brown line, it's this line here, right? That is the fib line. That's the midpoint of the two major fibs, the 41.81 down here and the 60-something, something, something up here. Okay, it's the midpoint of that. And then for this month, we've got this nice little bounce going on in there. So it was a breakout, a pullback, and a bounce. All of it coming off of a 4-month-long sideways pattern. So bottom line, right now, there is, without a doubt, some good opportunities in the market, assuming we hold. The big question is going to come down to tomorrow, the rest of this week. How do we do? Do we continue to press higher? Do we pull back? And then you've got to look at, are you going to wind up with more gaps? Do we wake up tomorrow and we get a candle that looks like this, and the day after a candle that looks like this, and the day after a candle that looks like this, and the day after a candle that looks like this? So it's time we're running out of steam, right? The candles are getting smaller and smaller and smaller, right? So maybe we'll make this one bigger. Okay. We're getting smaller and smaller and smaller in there. So are you continuing to gap? I hope not. I really want to see us move up a little bit higher, settle, close, pull back, get near the fib line, bounce. Because the firework called a Roman candle, you hold it out here, and it's a tube, and you shake it, and it spits this fireball up in the air, right? You never hold it this way because it could backfire. So you hold it out here, okay? When you fire that Roman candle, it goes straight up in the air. Once it's done going up, it comes straight down. The little bead of whatever's in there comes straight down, paper, whatever it is, right? If you have a straight up running pattern, you're going to get this big fail. If you move up and you pull back, that's good. Move up, pull back. That's really good. Move up, pull back. That is awesome. That's what you want to see. You don't want the run to just take off. I want some consistency. We don't want to give a trader or traders, even investors, the opportunity to go, man, it's been such a big move in the last X days, weeks, hours, whatever. I'm just going to take profits off the table now. And you get massive selling on Microsoft or Amazon or Apple or whomever it might be. All right? What do you mean trending, Brenda? I didn't see it with the context I was talking about. Sorry. But overall, what I just drew, yes, would be trending. Exactly. It's this, well, we can call it trending. The problem is this is a trend. I don't like that trend. This is the trend I like. And it doesn't have to be equal, right? All the same. I'm just drawing it because it's easier to do, right? But you advance forward and you pull back. You advance forward, get a little higher, and you pull back. You got a higher low. You advance forward, a little higher, a little lower low. That's what I'm referring to. Higher highs and higher lows. You got it, Brendan. It's exactly it. Higher highs, higher lows. Okay. So the S&P 500, I like it a lot. Big gap today. We'll see where we close up. I'm not making any big calls right now on it. I don't forecast in future or where we go next, except for fib lines. You know, if we look left, this is the other magical part of leaving your fibs on there. If we look at our high today, it is 58.2896. 58.2896 and 58.2604. That's where the fib line was. $2 away. That's where our high has been today. So is it illogical that we're trading like this? The answer is absolutely not. It's very logical. Not surprising now that you see it. Makes sense. We gapped up, pulled back to the one line, ran up to the next fib line, pulled back a little bit. Yes. Yes, 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 yes. All right. Okay. So we've got Inner Circle coming up tonight. We got our check-in. The monthly is on the 22nd. Trading news tonight, 8 o'clock. I'm teaching there. We're going to work on your mind tonight. Mastermind is tomorrow. Power option plays core training is this Friday. My team didn't want to put a day on it, I guess. This Friday. Yep, I'm just trying to fit in the power option plays training where we can get it all together somewhere. So we're doing it Friday. Pop covered call E-mini regular schedule, as is Power Hour Training Coaches Playbook. With the exception, Andrew is who's teaching this Friday's Training Coaches Playbook. And then Brandon still has 3 kick ass with SPX trainings coming up. That's what I thought. So this is Tripp's very first Training Coaches Playbook. He's going to work into the rotation now. This is his very, 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 very first Training Coaches Playbook that he'll be teaching, right? So you got another perspective from a trader who is crushing it, right? He's probably not in here because I didn't see any trades from him this morning. Yeah, I don't see him right now. But in the trading room we've got for Inner Circle, and he helps facilitate it with Amelia. And of course, Tripp's one of the coaches here, but he's crushing it. So he's now on Trading Coaches Playbook, right? So, and we just dropped a link in there. You can register for that. Alex said the recent pop core trainings have been terrific. I highly recommend it for everyone interested. Much appreciated. Yeah, there you go. Shout out to Tripp, Stephanie. Exactly. Dennis said, what is Trading You about? Trading You, Dennis, is a mini mastermind. We focus on a little bit on what's going on in the market right now with the S&P, of course, right? S&P and VIX, that's important. We've got a trading topic each and every week. I just put together a list of, it's not every week, it's twice a month. So 2 times a month we get together, 2 hours live. I do 1 hour of that live. Tony Benson does the other hour of that live. And then if you have questions on charts or technicals or anything about the market, what's happening, what's going on, it's a place to ask, right? So it's of our 3 masterminds, you've got Trading You, that's kind of the starter one. The one where most wind up is Mastermind Group. And then Inner Circle is really an invite only. You've got to have a good understanding. You don't have to be a professional trader, but you got to have a good understanding of what's going on there. We're not there saying this is what a call option is. We can't do that, right? Not an Inner Circle. It's too advanced for that. Okay. Andrew, let's start. I know we probably don't have the sign up page for it yet, but talk to Sean and let's see what it's going to take to get the sign up page for June 4th. Write that date down. June 4th, 8 p.m. is going to be micro day trading. Right? It's a term that I have coined. When you look at micro day trading, if you look it up, it's going to show you E-mini trading, right? For micros, for the very small contracts. You got the contract, the minis, and then micros, which is smaller than that. Micro day trading is what I'm doing right now to manage once I'm in that position, how am I managing my exit? Not waiting until the end of the day, not waiting to hit resistance or support. What's enough is enough. And I say it's time, pull the trigger and get out. Right. And I'm going to share those techniques that evening. Right. And that's what I said earlier. If you hear when I talked about it briefly, it's a $29 class. For this, it's a no-brainer. It's what's happening right now. So, and just so you understand, it's going to go into a library after this is taught. It's going to go into a library that you can purchase for 30 days at any time for $99 instead of $29. So when I tell you something's really inexpensive, just take note. It will get more costly when the class is taught. So once it's over. All right. So kick ass with SPX, right? You got those dates right on there, 13, 14, and 15. All right, weekly training topic is trading the H pattern. Guys, I'm getting a lot of questions on H's and trading of them and what should we be doing right now. And that's why we decided to put this one in. So got a V top and a V bottom in there, right? Swing low and swing highs. We moved up. The H pattern is this. It moves up to either the 60 or the 618 or the 50, and it rolls off of those levels. And we're looking for a two-line move. 1, 2. So this one rolled off of the 618, but Rob, it closed above it. Yeah, but remember, not everything closes right at a level. As far as I'm concerned, it got there, but never went any further. It rolled over. Now, there's just craziness in there. We gapped down, we bounced back again, we gave a second retest of the H, we're back up again. When you're looking at an H pattern, basically what we're looking at is this. You know, if you look at the letter H, right, the lowercase h, there, right? If we look at the reality of what it looks like on a stock chart, there, right? We're looking for that stock to make its move. All right, just getting rid of moving averages, it's easier to see. Okay. So here we started our fib, here's where we ended our fib. As we make our move up and we close near the 618, we're looking for a rollover. Each Fibonacci line, or not line, but the distance between any two lines is one standard deviation. When you look at it from a statistical analysis, it's one standard deviation. Stocks tend to move 2.5 fib lines is what the normal pattern is. So look, when we came back off of here, we tested it right here at this point. We moved down one line, we moved down two lines, 1.5, a little bit more. It's more than 2, right? And then we bounced. In other words, by the time you get to 2 standard deviations, 2 moves, you've got 96% of all data points have been met within those 2 lines. In other words, can I make it a little bit further? Yeah, but you ain't got much left normally. Doesn't mean it never goes further than 2 lines, right? That's not the scenario. But you can and will find that you're going to fail after that second line. Well, when we have all of this chop that's going on, and especially what was happening here with that big gap up, that gap and go, right? We gap down that big candle on this day right here, where my mouse is. We gap down slightly, little wick down, and ran like crazy that day. And the next day we gapped again down and ran to the downside. So when you have all of that happening, that H pattern is kind of elusive, right? You don't have clarity on the trade. My H pattern, that's why we're talking about it right now. The H pattern needs to happen when it's not and you're all over the place, just herky jerky. I need consistency. I need a movement that can be viewed as a smooth flow. Yeah, it's not a perfect lowercase h, but as far as I'm concerned, my version of it, that's the prettiest letter in the alphabet. Certainly the most profitable. Alex, I just signed up for micro. Oh, did we drop it in? Oh, we dropped it in. Thank you for that, Andrew. Much appreciated. Yeah, Alex, I just signed up for micro day trading class. I'm a simple man. Rob teaches, I show up. Stephanie signed up as well. Yeah, guys, listen, are we making a killing off of this at $29? Hell no. If 500 people come in, it's still not like we're crushing it, you know? This is more of, I think everybody needs to learn this. Okay, good, Stephanie. Good. Perfect. All right. Okay, let me take us back into presentation. Your stocks for review. All right, what candidates you want me to take a look at? We've got a few minutes. Drop them in. Stephanie, I think you said MSTR, right? Was that the one we were looking at from before? MSTR. Okay, good. Good. Keep dropping them in, guys. MSTR. First come, first serve. Okay. All right. So we're too high, above our fib line now. Oh, won't matter. Let me just move here. So we're too high above our fib line right now. So we've got to focus on previous fibs. We've got into that 419, 420 level. So if we bounce off here, we're looking at let's see, 20 to 66. That's 46 points. Let's try this one more time. I need to know what the fib it is. Come on. All right, so we're looking at $44 is that fib it. Jeez, okay. About $45. So we're looking at 20, we're looking at about 46, $47. So we need to split this level in half over here. So I'm going to back this up and I'm going to drop in a fibit. So 420, 443 would be our next upside there, Stephanie. I wanted to get in, but it did well at the open. I had the old fib on and it was at that level. Yeah, which right here, right? I mean, we're there. Yeah, so it gapped up right to that fib line and dropped. No kidding. Right? Definitely an interesting pattern today. It seems a bunch of stocks have done that where they moved up to fib lines themselves. So you've got some room 420 to 405. So if we get the bounce off it tomorrow, we got a rank of 100-point level right there as well. The 8 right there. I mean, we got a lot happening right there. So if we close near this, Stephanie, and bounce, I think you got room up to that 420. I'd probably be out about 416 of the trade. So you got about $8 or $10 move, which is not horrible. All right, Patty had put in Google. So little recovery for today. We got back into a neutral bias if we stay there. I've got plenty of room to the upside. We got to see if we need to split it. 57 to 68 is 11. We got 11. I don't need to split this in half, but I probably would just to take an exit on it there, Patty. I'd probably put half right in the middle, right about 162 or so. I'd probably target. All right. GE. Alex is asking for and said thinks you need a new fib. We do need one. We just don't have a place to draw yet. I don't really like to. You can't use today's candle no matter what. Even if it was a big running down candle, you can't use it until it's closed for the day. You just never know where you're going to wind up. We definitely need a new fib on it, Alex. We need to pull back somewhere, but we just don't have it yet, right? So I'm probably going to come off of that low here for it. But we do have the previous fibs that we could work off of. And once again, here we are at that 219 level. That's where we gapped up near today. 224 is the next resistance. And that 214 is the support. Okay. Also, new fibs should be easy. However, maybe you could, let me see, Alex. Yeah, so we don't have any other candidates. So let's do this. So let's look at APP. Yeah, so we didn't violate the 882 on this one. We didn't violate the negative 618. We're not older than 10 months old. This move here, $257. $290. There's the reason to redraw is right there. Oh, move. Okay, beautiful. Bueno. So I like where we're at. Give me a small move up. I'd like to close a little bit higher today, come back and retest that 345 tomorrow and bounce, and then 380 is resistance. All right. I think I got one more I can do, Alex. CDNS. Same thing. I mean, I don't have enough of a pullback. Yeah, see, and that's why you don't focus on today, right? I thought we already had today's candle, and we didn't. So I don't have anywhere to pull back to just yet, or that has pulled back yet. So nothing for me to redraw on this yet, but we definitely got a bigger move. Alex said, that's awesome. That's exactly what I had on my APP too. Love when my answer matches yours. There you go. Excellent. All right, everybody. Hey, good class. Hope you enjoyed it. If you liked it, what you saw here today, drop us an email and let us know. We always appreciate that type of stuff. Gives us a reason to keep going, right? But with that, everybody, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. I'll leave the room open for a few minutes. Grab those links that are in there for Trading Coach's Playbook and the micro day trading class. And I'll see you all in the next one. Take care, folks.